Good morning, I'm Taylor Wilson, and today is Saturday, August 2nd, 2025. This is USA Today's The Excerpt. Today, breaking down weak job numbers and Trump's response amid tariff tensions. Plus, let's talk about gold in the economy, and the Corporation for Public Broadcasting is shutting down. After a week of tariff announcements, President Donald Trump has fired the head of the Bureau of Labor Statistics after a report showed weak job growth in July. I spoke with USA Today White House correspondent Joey Garrison for more. Thanks for hopping on, Joey.
Hey, thanks for having me on.
So just starting with the jobs report itself, Joey, what did we learn from these July numbers?
So the U.S. added 73,000 jobs in July. In other words, employers hired that many additional new employees, and that was well short of the expectation, which was about 105,000 new jobs. And so really kind of a dismal weak jobs report. And it's followed two prior months of poor jobs numbers after those numbers were revised. And so, I think it's for the Trump White House, it's really calling into question the pathway that they've pushed forward with these high tariffs that he's doubled down on this past week. And Trump keeps talking about this being a booming economy under his watch, but some of the numbers right now aren't exactly bearing it out. I think a lot of economists will argue that employers have held off on hiring because of uncertainty about the economy, and part of that uncertainty is the impact of these tariffs.
Well, the president followed those numbers up by firing the head of the Bureau of Labor Statistics yesterday on Friday. Joey, what can you tell us about this move and why he says he did this?
Yeah, this was a really extraordinary move, unprecedented, really. He announced in a Truth Social post and then later talked about it with reporters that he had fired Erica McIntarfer. This is somebody, of course, who we didn't really know before Friday, but she was appointed as the head of the U.S. Bureau of Labor Statistics in 2024. She was a Joe Biden appointee and had been serving in that role for about a year and a half now, and he basically accused her with no evidence of manipulating the jobs figures and saying that trying to make Trump look bad and Republicans look bad. And so in bolstering his argument, he pointed to 2024 when there was more robust job figures that was released by the Bureau of Labor Statistics back when Biden was president and initially seeking re-election, and then Kamala Harris, of course, taking the baton from him. Trump accused the labor statistics chief of essentially trying to inflate those jobs numbers to help them out. And then he falsely said that the Labor Department revised those numbers after the election was over. In fact, we wrote a story about it last year, and others did as well. Those numbers were revised lower in August, 3 months before the election. So President Trump is just flat wrong with that accusation there. And, it's going to be really interesting to see who he gets appointed to this role to replace her.
Well, Jay, you mentioned tariffs. In terms of how big a role tariffs play in this conversation, what's the White House saying on that point, and how do experts frame all this?
So President Trump, he signed an executive order imposing a host of new tariff rates, higher rates on countries across the world. You'll recall he had initially announced back in April these very large, what he called Liberation Day reciprocal tariffs. He immediately put those on pause once the market started kind of wavering. And in its place, he had a 10% baseline tariff in effect in past months. But he had pointed to this deadline and promised to ramp up these tariffs again if he was unable to reach trade agreements with certain countries. And so he outlined those in his executive order. Now, interestingly, these are not going to go in effect until August 7th. So he's still punting a little bit, but we saw the market react negatively both to these tariffs, but also that jobs report. It was kind of a double whammy there. And again, there's just uncertainty. The White House has claimed that they've staved off inflation from spiking so far as a result of these tariffs. But I think a lot of economists still wonder, as these set in, whether companies are going to continue to eat the costs of these taxes on imports. And so that's sort of where we are right now in that. And we'll see whether Trump is actually going to stick to that August 7th deadline of when these will go into effect, or whether he could waver on that a bit. He has often threatened these tariffs and backed off later. So that's sort of the next benchmark that we'll get to in this long saga on the tariffs.
All right. Joey Garrison covers the White House for USA Today, joining me from the White House. Thanks, Joey.
Hey, thanks so much.
As Joey touched on, markets cooled late this week after disappointing job growth and Trump's order imposing sweeping new tariffs. The broad S&P 500 slipped 1.6%, while the tech-heavy Nasdaq declined nearly 2.25% yesterday. Meanwhile, the weaker-than-expected job growth is likely to trigger a Federal Reserve rate cut, according to economists. You can read more with a link in today's show notes. In uncertain economic times, it often means it's gold's time to shine. I caught up with USA Today money reporter Rachel Barber to discuss. Welcome back, Rachel.
Thanks. Glad to be here.
All right, so just let's start by talking about New York's Federal Reserve Gold Vault. What can you tell us about this and what's its purpose these days?
Yeah, this was a fun story to work on. We hear about the Federal Reserve when Jerome Powell gives a press conference and when the FOMC votes on interest rates like they did this past Wednesday. But what we don't hear a lot about is that 80 feet below its building in Manhattan is the world's largest known gold stockpile. So the vault itself is what you might imagine. It's a secure storage facility. And it's important because such a large stockpile actually helps maintain confidence in our global financial system.
All right, so how much gold is actually in this vault and who owns it?
A lot. To be exact, it houses 507,000 gold bars, according to the Fed. That's 6,331 metric tons of gold. And for context, a Toyota Camry weighs between 1 and 2 tons. So it is a lot of gold. And none of it actually belongs to the Fed. Most of it isn't even American. The US owns about 416 metric tons of it. The rest belongs to foreign governments, central banks, and official international organizations who all just trust the Fed to guard it.
All right, well, anyone who's seen Die Hard with a Vengeance might wonder if real life version of the heist we see in that movie could be possible. Just how secure is this vault, Rachel?
Yeah, I asked one of my sources who is a strategist at the World Gold Council this question, and he laughed and said, well, basically, that movie makes for great entertainment, but in reality, it's one of the most secure locations in the world. So pulling off a heist there would be virtually impossible.
And where else is gold stored around the world and how is it stored?
If you're interested in gold in the US, you might have heard about Fort Knox. That's the largest American owned gold stockpile, which is in Kentucky. The US has about 4,500 metric tons there, but there are gold stockpiles all around the world. Some of the countries with the largest reserves, other than the US, are Germany, Italy, and France.
Well, Rachel, in this era of digital currency and the kind of changing face of currency across the board, why do many people still like gold today? And how has gold demand moved in recent years?
Why people still like gold is actually kind of intuitive. It's historical money. Some still view it as quote unquote real money, something that can't be printed. And although the US did away with the gold standard a long time ago, it's still a highly liquid asset, has no particular credit risk, and it's not directly controlled by a central bank. So it performs well in good and bad times. It's valued at its highest when market risk is unclear and uncertainty is high, which is kind of the world that we're living in today. And that may be why gold overtook the euro as the second largest global reserve asset after the US dollar last year.
All right, this was a fun piece. Also, with some great graphics. I want the listeners to go click the link in today's show notes to check that out. Rachel Barber covers money for USA Today. Thanks, Rachel.
Thanks, Taylor.
The Corporation for Public Broadcasting announced yesterday it was starting an orderly wind down of its operations, weeks after Congress passed a measure that clawed back more than $1 billion in funds to the organization. The corporation has said more than 70% of its federal funding, which it disperses to NPR and PBS, goes to local public media stations. PBS advocates previously told USA Today the budget cuts would disproportionately affect rural areas. And NPR said on its website it relies on direct federal funds for only a small portion of its budget, but its member stations receive a bigger portion of their operating revenue through the Corporation for Public Broadcasting. The CPB was established by Congress in 1967. And coming up tomorrow, you may have heard this term, immersive entertainment. It's having a moment right now. So what makes something immersive?
People remember moments. Experiences are made up out of what the audience remembers, what they take away from it. And so if you focus on the moment, then you've got it.
That was Noah Nelson, publisher of No Proscenium and co-founder of the Immersive Experience Institute. He joined my colleague Dana Taylor to discuss how the pandemic accelerated demand, what designers are learning from escape rooms, and how new formats are reshaping entertainment. Hear that conversation tomorrow right here, beginning at 5 a.m. Eastern Time. And thanks for listening to The Excerpt. As always, you can email us at podcasts@usatoday.com. I'm Taylor Wilson. I'll be back Monday with more of The Excerpt from USA Today.